You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, everybody, to episode 203, I do believe. Mm-hmm. How you going, mate?
I'm doing well. Exciting week for me.
Doing well.
Past the milestone, 100,000 subscribers.
Oh, yes, dude. Congratulations, man.
Yeah.
That totally just skipped my mind. But yeah, what an achievement, bro. That's awesome.
It's been a long time coming. It actually snuck up kind of quick. I think it was like, I had kind of two or three pretty big videos in the last, I think, 2 or 3 months. And then that was like 20K subscribers. So it kind of rocketed from 80 to 100 pretty quickly. So
it's crazy how that can happen, eh?
Yeah, no, it's good. I'm excited. Yeah, it's been
Congratulations,
funny. I told
man.
you about this as well. I said as soon as I started to get close to 100,000, my motivation would pick up. That's exactly what's happened over the last few months. So it's been really good.
And now you're not going to release another video for
and now I'm done, guys.
Year.
So I'll see you guys in 2024. No.
He's taking his silver play button and he's leaving.
No.
Have you got the message in your dashboard about your silver play button yet?
Not yet. It said it takes up to 10 days, I think, or something.
Takes a little
ridiculous.
while.
So yeah. So I got to wait, but yeah, hopefully I think it said the delivery time was like 2 to 3 weeks, which is crazy. So if it actually does come that quickly, then
quite fast.
I'll get it before Christmas, which would be nice.
I don't want to downplay your achievement, but they make so many of those silver play buttons these days. It's like
the factory's just
yeah.
I was having a look.
It's actually crazy.
Oh, what was the number? I looked it up the other day because I was interested in how many, like what percentage I was in terms of overall channels, like in terms of rank and how many were above. I can't actually remember now what the figure was for how many channels above 100,000 subscribers, but it was something crazy like 300,000 or it was a very large number. I think over a million was like, even over a million was like 20,000 channels, which in the scheme of there's 100 million channels on YouTube. So it's like top less than 1%, which is still crazy. But yeah, it just gives you an idea of how big YouTube is now.
It's massive.
It's gigantic. So yeah.
I wonder if I can find my ranking.
Yeah, I just Googled, I can't even remember what I Googled. Something about,
So for context, I have it's like a mid-sized channel. I don't have 1 million subscribers or anything, but I have several hundred. I have 683,000 subscribers. And Social Blade ranks me as the 1,528th most subscribed to channel.
Yeah, right.
Wait, that seems.
But everyone who's equal is also on that particular rank. So.
Oh, true.
Yeah, it's not. It's Social Blade's not very good for like figuring out.
What did you use?
I just went to. I'm not gonna be able to find it now, but I just Googled for YouTube statistics, like channel statistics.
True. Because there'll be a lot of channels with the same amount of subscribers.
Yeah. But I'm pretty sure it was something in the hundreds of thousands was over 100,000 subscribers, and then over 1 million, it was. I remember being shocked that it was still like 10 or 20,000 or something like that.
I found it.
You found it? Oh, okay, good.
So it actually says here, this subscriber rank, this spot is shared with 85 other people, and there are currently 57,100 channels in a higher position.
Okay, there you go.
57,000.
Yeah.
So that's crazy. And so there's 57,000 channels out there that have more than 683,000 subscribers.
Yeah.
Whoa.
It is crazy.
Whoa.
Yeah, it is mind-blowing. But then again, like you put that as a percentage, like 60,000 as a percent of 100 million channels is actually a tiny, tiny fraction. So it's you've got to really think of it in the ballpark of how big the platform really is now on a global scale. This isn't just English, channels. We're talking about, tens of thousands, hundreds of thousands of channels, probably millions of channels across, Asia and Europe and that sort of thing in different languages. So, it's a big playground now. There's lots of kids. Lots of kids.
So.
But it is still exciting.
And this is why people say, what's going to be the next YouTube? Yeah. What's going to take over YouTube?
Nothing.
I just don't think that's going to happen.
No.
Like, look at
not for the
those
foreseeable
numbers.
Future. No.
Not
Yeah.
for the foreseeable future. Yeah, never say
Yeah.
never, of course. But
Yeah, I
in the
think-
medium term, definitely.
In our
not.
lifetime, we'll certainly see it.
For sure.
For
sure.
We will certainly see a big transformation. I mean, maybe even in the first half of our life as well, especially if VR and AR takes off significantly and the platforms that are popular there are far different to the ones that are popular on when we're consuming content on laptops and phones. Who knows? Maybe YouTube maybe we'll be doing 3D virtual YouTube videos in 15 years. Who knows? Maybe it'll still be YouTube that's on top. And we'll have to get all this fancy equipment to be able to put videos together.
Yeah, that'd be weird. All right. What are we talking about today? Oh, we've got the Federal Reserve releasing their statement after their 2-day meeting.
A lot of central bank
Elon
stuff.
Musk has finally bought Twitter, and all hell is breaking loose. So we'll talk about what's going on there. A bit of news with TikTok as well, and also some interest rate news from around the world, Australia and England, and Uber. If we get time, we'll have a look at Uber's earnings. Hopefully we get to some Q&A as well. So we got a lot to talk about, Hamish. This seems to happen every week.
We'll do our best.
We have a lot to discuss.
We'll see.
So let's do it.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker. You can also use Excel, or you can enter your trades in one by one manually if that's something you want to do. And once you do, it will track all of the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, as well as use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan. You can track up to 10 different holdings, so 10 stocks, ETFs, that kind of thing in your portfolio, completely free forever. And you also get access to a lot of reporting anyway. But beyond that, if you want to sign up for full reporting and benchmarking against the index and that sort of thing, then you can get 4 months off a yearly subscription if you use our link. So whether you're signing up for a free plan just to check it out, or you want to sign up or upgrade to a premium plan if you already have an account, use that link and you'll be supporting the podcast in a little way. And this doesn't just go for people in Australia and New Zealand. For those who are wondering if this is it is an Australian-based business, but it works all around the world, and I think it supports most of the major stock markets, including
it does.
It's very broad. I think it was like up to 20,000 stocks across a vast number of platforms. So,
Lots of markets. Yeah, exactly. Yeah, for sure. Actually, some people do think that Sharesight's just for Australians, but no, definitely not. Works around the world. That's my best attempt at
You get a
singing.
soundboard, get some music into this podcast.
Oh, yeah. That'd be nice, man. I would just abuse the hell out of a soundboard. Air horns all the way through the episode.
That's actually a disaster. Maybe I'll get the soundboard. You can.
Okay, you can have the soundboard.
Give it back. Where should
that would
we?
be pretty fun.
Where do you want to start today? Should we start with Elon? I think we should start with.
Yeah.
This is probably the biggest story of the week. Everything's
Probably.
kind of thrown into chaos over at Twitter
Yeah,
now.
true that. If you use Twitter, then everything's been thrown into chaos. If you don't really use Twitter, then, well, it doesn't really bother you at
then
all.
no one really
But
cares.
yes, last Friday, it was official. Elon Musk, he bought Twitter and he fired the company's CEO, CFO, policy and legal team leaders, and dissolved Twitter's board of directors.
There you go.
Bang.
He's gone for the
Just like
hometown
that.
international approach of being the only director and being the secretary he's taken every position.
So there you go. So yeah, they're all out. He bought it. He bought Twitter for $44 billion, Hamish. $44 billion. So there you go. I mean, honestly, the spread on that was so massive. You remember we were talking about that? Like Twitter shares were
it was
nowhere
pretty
near
significant, right?
54. I think it was 54.20 or something. I can't even remember. But
It was like 20,
Twitter shares were
25% or in that range, maybe a bit more than that.
30. No, I think at one stage. Hang on, let me.
It did vary quite significantly. When the deal was going to fall through, I think it was almost maybe 35 or 40% that the spread was between the price that the stock was and the price at which Musk said that he would had made the offer at. So that's what we're talking about when we say spread, just the difference you could have made if you were holding Twitter shares prior to this confirmation and what you'll get paid out ultimately. But yeah, it was certainly more than it was certainly more than the Microsoft spread, which I don't think that acquisition has gone through still. So that one's still
no, it hasn't. It's like going through regulatory approval. But no, you're right. It was about like 30%. Microsoft's one was like 10%.
Yeah, 10%.
And then the Twitter one was like 30%. So, I mean, if you had some sort of inside knowledge and you knew that, I don't know, not insider knowledge, but if you had some sort of like legal brain and you could figure out that this was going to go through and you made a bet on that, then there you go. You've made, 30% in a very short amount of time. So that's what Warren Buffett's trying to do, but with Activision stock at the moment. So, pretty crazy. But on top of that, so he's also announced a lot of changes to the platform already. So Elon Musk laid out a series of ideas on Tuesday for a new user verification process for Twitter. In a thread of tweets, Musk criticized the current system, which gives a blue checkmark or verification to notable users like politicians, members of the press, executives, and other people and organizations. Musk said he will give, quote, power to the people by offering verification through Twitter Blue for $8 a month. He said participants will get priority in mentions, replies, and search, receive half as many ads, and will be able to tweet long videos and audio. He added that a secondary tag will appear below the names of users who are public figures, which, as Musk pointed out, already exists for politicians. So there you go. Thoughts on that? You were tweeting about this.
Yeah, I was tweeting about it
a
little bit.
Ironically,
because my problem is that, look, I think I've said this for a long time. I think we spoke about it in Omaha. I think it's a great idea because by charging a small amount of money, they can cover the human element that is involved in doing the verification process, which is a relatively small process. And if you assume someone stays verified for years or at least a year, then they're going to make money on those. It's very easy for them to hire the people necessary and still make money on it. My question is whether I didn't get a clear answer, at least from looking at Musk's tweets, as to whether you're actually just paying for the tick or whether you're paying for a human to go through the normal verification process of maybe you upload a couple of ID points like you might do when you're verifying with, signing a contract with a phone company or something like that. So I'm not sure which it would be. And there was a comment below one of his posts that asked about people impersonating, just using the tick mark to scam. And his reply was that already happens. So he didn't actually answer the question, which that kind of indicated to me that potentially this isn't an actual verification tick anymore, that it genuinely is just pay for the tick rather than pay to be verified, which I think pay to be verified is absolutely a great idea. Pay to get the tick that on every other social platform is genuine verification is a disaster. That's a disaster. That is literally giving scammers a tick that people have believed for many years is a true indication that this is that person who I'm interacting with.
I can see what you're saying. I think he came back in another tweet and saying that although technically a spammer could create a verified or a blue check mark, well, let's not call it verified, a blue check mark account and try and spam their way through. I think Elon's idea was that it makes these targeted spam, I don't even know where they're based in the world, but these targeted spam efforts, it makes it very, very expensive for them to do it because they have however many thousands of accounts and each one of those accounts has to pay $8 a month. And plus, if they get reported or if they engage in spam activity, and I do trust that Elon will put in some measures to actually be able to detect spam activity, repeat comments, that kind of thing, then they do get automatically kicked off the platform. So I think his idea is that maybe the way to defeat the spammers is, sure, they can buy a blue check mark if they want, but they're going to have to pay for it. And hopefully by the fact that they have to pay for it, the business that is spamming people out of their money no longer makes money on Twitter, so they don't do it anymore.
Yeah.
Does that make sense?
I get that. And I think it can certainly deter some of the very body spam stuff that we see. Yeah, I'm just still concerned about the idea of fundamentally changing what it means, that tick mark means. Because I think a lot of people just think, it's just a status thing for celebrities, and celebrities are just upset that their status is going away. That's really not what it is. It's because we get fake accounts made about us. And it's on every other platform since the beginning of the internet. It's a genuine tick of approval of this is the genuine person, and that's no longer going to be the case. I mean, yeah, there is going to be a barrier of cost, but someone still could pay $8 and make an account called Hamish Hodder, put my profile on it, and then if I don't pay for it, I probably get mass reported, so I have to pay for it just to match the scammer. And then even if I do get it, I'm not proving that I'm myself because the scammer also has it. So I see what you mean. I just don't like it, especially since he could hire people to do it. Like, think about, like, human verification would genuinely take, per person, it would take one employee. One employee could verify tens of people in an hour, right? So you're talking about a very small amount per person to just check the photo, the name, that kind of thing. And then they collect hundreds of dollars in revenue from that person going forward. I would even pay far more than $8 a month for genuine verification. I don't understand why they couldn't just do that. I hope that it's still something like that.
That's a good point, actually, because on YouTube, I am not super stressed. I still don't like that there's spam, but there's not much we can do about it. But I'm not super stressed about the spammers because they have to include these wacky names and they have to include like Telegram plus blah, blah, blah. And they also don't have a verification tick when they comment.
Correct, yeah.
So that's pretty easy. I mean, it blows my mind that people still fall for it, which is very sad. But But I'm not super concerned for the majority of people because it's quite obvious that, okay, there's no verification tick. Even if the channel's called New Money, it doesn't have the verification tick. It's not Brandon. So I'm not. But then again, when I go over to Instagram, I don't have a large following at all on Instagram. I've never really tried it. And I myself don't have a verification tick for the New Money account.
Yeah.
So that's where I get a lot of people messaging me saying, wait, which one is you, dude?
Yeah.
Because and they can't tell.
Yeah.
So.
And on YouTube, if you click on the scammer's account that's impersonating you, they don't have any of your videos. They have no subscribers because you can't bot any of that away. Whereas on Twitter, you can just bot retweet every post. So it's not exactly the same, but it's pretty close. And if people have far less followers, like I think I have like 1,500 followers, that's so easy for them to buy followers that match that amount. Same on Instagram. And Instagram, they can just port all of your content over. So it's so easy to make a really similar looking profile. Whereas on YouTube, that problem, as you said, doesn't really exist. So
there you go.
I'm not. I'm a little concerned about that. But it is what it is. It's not my platform. So
he's certainly standing up. He's copying a lot of criticism for this $8 a month thing, but he is he's kind of memeing it now. Like, what was that thing with AOC that he tweeted earlier?
I don't know. AOC was making some insinuation that it's affecting free speech or something. And then he said, okay, thank you, now pay $8 or something like that, which I thought was
the
pretty
funniest
good.
thing was then he linked to her merch page. Which has like a
$58 t-shirt
hoodie with like AOC, which is like a $58 hoodie or something like that.
I have I just find it ridiculous when people like, it's kind of like the Bernie Sanders caring about the Mars family that makes like candy bars, like being billionaires. Like, if it's not, I kind of get it when it's related to people making a lot of money off necessity items like health or something that people need, and it feels, that it's kind of wrong that someone's maybe gouging their way on the back of someone's necessity. But when it comes to like something like paying for Twitter Premium or eating chocolate bars, like, I just have no respect for people who like just clearly hate just the idea of people freely transacting. Like, you have free speech on Twitter if you don't get this verification tick. Like, that is absolutely absurd to suggest that there's any limitation on your freedom of speech because of that. Especially because AOC would argue that freedom of speech doesn't extend to private platforms because she probably wants quite a lot of censorship on what's allowed on platforms anyway. So it's just absurd, hypocritical, but it's fun to dunk on them. So
he should totally just meme the hell out of this now. He should like go full advertising Twitter being like free speech for just $8 a month. That's what he should do.
It's just so good.
He should just lean into it.
Yeah, it's so
He's
good.
He's got enough followers.
And the politicians have to pay. Like they kind of have to.
Yeah.
So it's just.
That's the funniest thing.
It's just
this
so
is
good.
their platform. This is how they get their message out.
It's so good. It's great.
Yeah, my opinion is they should just every normal pleb has to pay $8, and then all politicians have to pay like $50,000 a month.
Yeah, exactly.
Make them bleed.
Yeah, should scale it to a follow account.
Yeah, or that would be interesting. That would be very interesting.
That'd be pretty fun.
Oh dear. Anyway, so that's what Elon's doing. That's what Elon's doing. Anything else to add on the Elon Musk?
I don't think so. I'm just excited that he's actually, regardless of what's kind of happening, it is exciting to see some changes happening. And he seems to he spends a lot of time on Twitter, as far as I can tell. So it seems, and he also kind of engages with a lot of ideas. So it'll be really interesting to see what changes happen, because there could very well be some other big changes that happen over the next year or so that are meaningful and make a really interesting platform. So. I'm pretty excited by that.
There's a great meme that he's posted where it's like happy face with a Starbucks thing, and it's $8, and they're like, oh yeah, and then it's like $8 for 30 days of Twitter verification, and people are like, oh
yeah,
outcry.
yeah, it's pretty funny.
Anyway, what should we talk about next?
Let's breeze through some central bank changes interest rate changes that happen. I'll start with Australia, and then we can. I think you've got the US that happened this week as well. We've also got the Bank of England. A little bit of news out of them as well. So it's all happening this week. But the Australian Central Bank, the Reserve Bank of Australia, did their 7th consecutive rate hike this week. It was a 25 basis point hike, so a tiny little hike in the scheme of hikes that we've seen around the world, bringing the total to just a little bit, bringing the total to, that's a niche joke if anyone got that, bringing the total to 2.85%, which again is very low compared to some of the other central banks. I think, you'll take us through the US and what they've reached, which is quite considerably higher than that. But even still, it's the highest cash rate, the official cash rate in Australia since 2013. And of course, sits well below the long run average of 5+%. In terms of the direct kind of impact, it's always a good idea to take a look at how it immediately will affect mortgages, as the major banks have had a habit of immediately passing on any interest rate hikes to the variable loan interest rates on mortgages. A $500,000 loan will see a $74 per month increase on this rate hike. And since May, if you include all of the rate hikes since May, it's now those mortgages are up $760 per month on a $500,000 loan, which is pretty significant. It's starting to get significant. Quite significant. I think it's in the ballpark of about a 40% increase in the overall payment. Since May, 40% overall increase since the bottom, which was back in 2021, I believe. Pretty significant rate hikes kind of continue to go, even though our official cash rate is still quite low, relatively speaking.
But I guess that's the point, right? That's the point, is to take people's money away from them.
Yeah.
Take businesses' money away from them. Say, no, you don't have this money anymore. We have it now. And all of a sudden they spend less and inflation comes down.
Yeah.
So,
and even though I think it was last week or the week before, we saw that a lot of the inflation, or most of the inflation, I should say, is in non-discretionary purchases, things that are kind of necessities. There's a large part, as we saw, that was discretionary, and it's in that area that we should expect to see quite a slowdown in demand or slowdown in inflation from this impact, as people kind of have to spend more on their mortgage. They don't have a choice about that. So they will cut discretionary spending that's not necessary for them.
Yep.
Yeah, of course, this rate hike comes after inflation hit 7.3% at the end of September in Australia. That was our last kind of figure. The RBA also gave a projection for the end of the year. They expect inflation to continue to rise and peak at 8% by the end of the year. They said, as is the case in most countries, inflation in Australia is too high. Over the year to September, the CPI inflation rate was 7.3%, the highest it's been in almost 3 decades. The Treasurer Lowe said, inflation is then expected to decline next year due to the ongoing resolution of global supply side problems and recent declines in commodity prices and slower growth in demand. So, combination of slowing demand driven by interest rate increases, as well as some of the supply side issues healing themselves, is what they expect to kind of happen over time.
It's what we've been hoping for the past year or two.
Yeah,
that was the whole Fed's argument back in the days. Like, it's transitory. Don't worry. The supply chain will come back, and then we're all good.
Yeah. And I wrote that down. It's important to remember that pretty much every report that's come out, we've seen central banks change their forecast for where interest rates or where inflation will peak. We've seen that pretty much every single month. Since for the past 18 months. So whenever you hear, things are going to ease, this is the peak, just remember that they've moved the goalposts every month or every quarter for a long time. So just keep that in the context of of their ability to actually predict when these things will resolve themselves.
It was like we were reporting like a little while ago that the Fed came out and said, look, we think that 0.25% rate hikes in 2022 will be appropriate. I remember I think I made a video about that at the time. It's like, wow. That seems sweet now.
yeah can we have that now?
But it just goes to show you, like, they don't know. So when did you say that was? That must have been in the start of the year, right? Or just before the start of the year, because they didn't start rate hiking until this year. So it must have been. I'm going to try and find.
Yeah, I'm pretty sure it was at the start of the year. They said we were all kind of saying whether it was going to be more or less than 3 rate hikes throughout the year, which is crazy because yes, Australia's at 7, and I think the US has done more than that potentially. I'm not exactly sure.
I think around about there. Oh, why can't I find it? Let's search my channel because I made a video about it. Fed. Let's search Fed. Yeah, here we go. The Federal Reserve confirms 3 interest rate hikes are coming in 2022, published December 2021.
Yeah. So there you go. It's less than a year ago, and they were absolutely wrong by a huge margin. And I remember because I'm pretty sure at the start we made a prediction. We'll have to come back and circle back to this, but I think we made a prediction about whether there'd be more or less hikes. And I'm almost certain we were just dancing around 3, like maybe 4 or 5 rate hikes. But certainly even us who
not 7.
Yeah, we had the idea in our heads that potentially inflation could just continue to spiral. And I think, but even then we weren't brave enough to make a prediction of that many rate hikes. So yeah, it is very difficult with all these numbers coming out all the time to remember and like zoom out, step back and look at the bigger picture of what's kind of been happening and how uncertain it all really is.
No one knows. No one knows. The thing we do know is that we don't know.
Yes.
Do we have more to talk about on the Australian side?
That's pretty much it. One of the things I wanted to note was that Australia has been a bit slower with our interest rate hikes, but a big reason for that is because we have a heavy reliance on variable and short-term fixed mortgages, and that ultimately means that people are far more likely to feel the pinch of rate hikes faster than maybe in the US, and therefore less rate hikes may be necessary to curb the discretionary inflation. So that's just something to keep in mind, that even though our inflation might be the same as another country, if they have more fixed loan mortgages and long-term loans and that sort of thing, then they may be able to sustain higher interest rate hikes than we can. Therefore, less is necessary for us to get inflation down. So that's just something to kind of keep in mind. And then you want to take us to the US and then we can circle back to the UK?
Sure. So I think this is probably the most watched interest rate kind of FOMC meeting. I think most people's eyes are on here. Although in the UK, a lot of people have been watching what's been going on in the UK lately as well, which we will talk about. But over in America, the Federal Reserve has just finished their 2-day meeting. And it says here the Federal Reserve on Wednesday approved a 4th consecutive 3/4 point interest rate increase and signaled a potential change in how it will approach monetary policy to bring down inflation. In a well-telegraphed move that markets had been expecting for weeks, the central bank raised its short-term borrowing rate by 0.75 percentage point. By 0.75 percentage point. I guess it's not quite a point. Points plural. 0.75%. We'll say it like that. To the target range of 3.75 to 4%, the highest level since January 2008. The move continued as the most aggressive pace of monetary policy tightening since the early 1980s, the last time inflation ran this high. Although the interesting thing that people have been highlighting online and in the media is that they added a new section to their release. So I think their release is pretty much like copy paste, copy paste, copy paste, copy paste. In fact, people go through and they like analyze it, cross out what was there last time, what isn't there last time, and what is there now wasn't there last time. And they like compare and see, okay, how is their wording changed?
So Jerome's lazy is what you're saying. He just copy and paste the previous report, sticks some random number in there and then
Yeah, exactly.
Oh, wait, do I have to do a rate hike this month? Oh, just do the same as last. Just do the same as last month.
Oh, that statement's out today. What was last month's? No, that sounds about right. I might just update that and send it. Sincerely, Jerome Powell.
No, it's okay. So there was a new section added to the statement.
There was a new section, yes. This time they added that the Fed, quote, will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. Okay,
sounds ambiguous.
That's a new section. So people are, but that section wasn't there last time. So people are reading into this and saying, okay, is this a potential sign that the Fed could be considering slowing or stopping rate hikes, as this was the only bit of text that was changed after their last meeting, which was September the 21st. And funnily, this idea actually aligns really well with what Elon Musk was saying on the Tesla earnings call that we were talking about 2 weeks ago. Because he basically said the Fed needs to be really careful in raising rates further because they might be inflicting unnecessary harm, because at the moment he's seeing more deflation than inflation at the present time. And the thing to remember is that all these rate hikes that are affecting the now are based on data that has already happened last month. So all of these policy decisions, these interest rate rises, are always done looking in the rear view mirror as opposed to looking out the front windshield. And that's an important thing to kind of remember about how this is all done. So what else have I got to say? So basically that's all I had to say. Maybe Elon does have a point, and maybe now the Fed are kind of updating their stance now that maybe they're also seeing this. Okay, so in most items now, it seems to be deflating at the present time. We won't get the numbers for that for another month or so, but maybe we need to start treading a little bit more cautiously. But that would be a fairly big 180 on what they were saying last month, which is we know from history the consequences of slowing down too quickly, so we're not going to do that. But anyway, what do you make of this? I'm probably reading too much into this.
Well, I think it's just hard to. It is very hard to read. Everyone wants to all these news articles, they kind of want any piece of a nugget that they can say the rates are going to go this way or that way. It's very difficult to say, I think. But yeah, it would be strange, I think, if they suddenly didn't do any more rate hikes, given what we just heard the last couple of months, where they were saying, no, we don't want to even stop once inflation starts coming down. We want to make sure we're pushing it right into that range, which tended to indicate that they were willing to go too far harshly rather than lightly.
Yeah.
But who really knows? I don't know. Jerome tends to kind of preemptively say things, so maybe this is the first step. Maybe this is the first contact. This is our first contact, and then next time he'll mention it like twice or something, and then then maybe in a couple months we'll see a rate no more rate hikes or something. But who really knows?
It shows you that they're aware of. They're very aware of what people are talking about at the moment.
Yeah.
We will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity.
Yeah.
Okay.
Yeah.
It shows you that they're switched on, they're watching it, I guess. Maybe that's all they wanted to achieve. It's we're still raising rates, but we want to tell you plebs out there that we know, we're watching this.
Yeah.
I don't know.
I think all in all, Jerome's done a very good job so far. I thought he was a little bit late on the rate hikes, but
absolutely,
fair enough. Yeah. I think to not, it's impossible to be perfect, of course. But I feel confident with Jerome Powell running the Federal Reserve, over at least maybe some other central bank leaders.
Yeah, definitely. I mean, he should be the best because he's got the most history to look back on what did and didn't work. So naturally, every leader. Every next chair of the Federal Reserve should be better than the last because they've just got more examples to look back on.
Yeah.
But no, I think he'd do it. I mean, people, I think, have fairly criticized him about the sheer amount of stimulus that kind of went on, which is fair enough. It is quite mind-blowing exactly just trying to think about how all those trillions of dollars, that's a real number, but it's almost hard to even contextualize how big that number really is, how much money was digitally created. But I think overall, I mean, even though it seems like from month to month, they do, it's not for another month that they do another hike, they are acting very quickly, which I think is good, but it seems like what Ray Dalio said, they went very quickly in one direction and now they're very quickly going in the other direction. So how this all plays out, time will tell. I don't know. I'm not a macro expert.
No.
It'd be cool to chat to a macro expert.
Yeah.
There's plenty of Twitter pages and stuff that are just boss on the macro. I mean, we're really not. We talk about this stuff because it's important to keep up on, but we're not macro investors at all. I mean, this doesn't really affect our investing in the slightest. It's just good to know the context behind what's going on in the macroeconomic environment.
Yeah. I mean, even someone like Ray Dalio isn't really making macro, at least not 1 year macro predictions, because his philosophy is still just basically to widely diversify so that wherever the money flows, you'll invest. I like listening to Ray Dalio because he talks about the mechanics, but the mechanics it's just the theory, and in the real world there's so many other factors that can influence what we actually see happening. So I don't tend to listen too much to macroeconomists who make short-term predictions saying, oh well, jobs are going to do this and interest rates will do that and then this will happen.
Pointless.
More just understanding what the mechanics say will happen if certain things play out. If inflation does continue to go, we don't know if it will, but if it does, this is what, the set of circumstances that will happen after it. That's what I like listening to. And Ray Dalio is excellent for that. But yeah.
Yeah, absolutely.
Yeah.
What's going on in England?
Yeah, so this is just a bit of a preemptive story. So the Bank of England is set to raise rates. So I think that's going to happen. Well, by the time you're seeing this, it will have happened, but they're expected to raise rates 75 basis points tomorrow for us. And that would bring their rate to 3%. So the Bank of England, again, is behind the US, slightly ahead of Australia, but considering their current inflation is 10.1%, they're quite far behind relative to the US. yeah, so I guess we'll see what they end up doing, but that's seems likely what's going to happen. And yeah, that's pretty much all I had for Bank of England.
Oh, okay. There you go. Nice.
Just a little update.
Sweet. What should we talk? Oh, can I tell you about this crazy story?
Yeah.
Taylor Swift. You know her? You heard of her before?
No. Who is that?
She
played basketball?
She played basketball. I've seen your Spotify most recently played. I know.
On that like live sidebar, you're just like, Hamish listens to a lot of Taylor Swift and Justin Bieber.
It's a love story, baby. Just say yes. I wanted to include this because it's actually just incredible. Taylor Swift currently occupies all of the top 10 spots on the Billboard Hot 100 list.
Wow. Yeah, that's crazy.
How insane is that?
That is pretty crazy.
That is flipping crazy. Anyway, sure enough, it's leading to quite a lot of financial success for Taylor. And on the back of this amazing success, Taylor Swift said Tuesday she's heading back on tour as she occupies all the top 10 spots on the Billboard Hot 100 songs with her new album, Midnights. She's the first artist ever to achieve this Billboard feat. Her album has enjoyed massive success since its release at midnight on October 21st. The song Anti-Hero was the top spot, followed by Lavender Haze and Maroon. 2 official music videos for Bejeweled and Anti-Hero have combined over 60 million views on YouTube since the album's released.
That's crazy.
Swift also announced her, imagine putting it like a mid-roll in the middle of the music video.
Yeah, you can't be doing that.
That would be so funny. Like you draw your music video. You know how sometimes there's the music video and it just goes on for like forever and it's like a skit as well. It's like an act. Yeah. Imagine having like just making it hit the 8-minute mark and dropping a mid-roll in the middle of it.
So bad.
That would be so funny.
Oh my God.
Anyway, Swift also announced her next tour, her first in nearly 5 years. Taylor Swift The Eras Tour is scheduled for 27 dates at US stadiums beginning in March. Swift said international dates will be announced soon. She described it as a journey through all the musical eras of her career.
Is this your way?
Much to talk about.
Is this your way of telling me you want us to get tickets to Taylor Swift next year?
It is.
We could have just done this off the podcast. You know, I would have said yes. You've seen my Spotify playlist.
No, there's nothing to talk. I just wanted to add it in here because that is
crazy.
An incredible achievement.
Yeah, there's not many people that tend to. Well, I'm not sure about the exact top 10, but there's kind of a couple like Ed Sheeran and her, and maybe even like Kanye, maybe. But maybe we shouldn't talk about Kanye. But it's very rare that a new album comes out and it just basically the whole album occupies the top of the charts. It's just this crazy feat where it's like, wow, like they're really so far above that as soon as their new album drops, everybody just gets sucked into it. It's kind of crazy.
And it makes me think like that record label that Taylor Swift is getting annoyed at.
Yeah.
Why? Just give her what she wants. Just give her what she wants. You're going to make so much bank out of being partnered with Taylor Swift. I think like she wanted to own her own music and then they agreed to a deal where she would own one album back for every new album she released or something.
Okay. Yeah.
And she was just like, this is ridiculous. I don't really know the story, but holy smokes.
Yeah. I don't really understand
if you're someone like Taylor Swift and I'm the music, the record label, I'm like, Taylor, you can do whatever you want. You can do absolutely whatever. Just bring me along for the ride.
I don't really get the relationship between record labels and artists. I mean, I get it in the past. A big part of it, I guess, is distribution and marketing. So they're able to market the music and distribute it to radio stations and that sort of thing. But I feel like a lot of that could be done independently now with the birth of the internet. But maybe I'm wrong. I mean, I guess they still provide studios and staff and that sort of thing. So. You know, I'm sure there's
marketing.
I'm sure there's some there's some value to signing with a record label, but yeah, it does.
Is it mainly just the marketing?
I think marketing, distribution, so you know, CDs and also distribution to radios, all the licensing. Like there is, I guess, a lot of regulatory and contractual elements of selling your music broadly. But you would imagine that is going away as people kind of like if you just had your music on Spotify, you're just licensing with Spotify. Like you're not licensing out to different radio stations and that sort of thing. So you would think it would get less complex in this new era. But it's an area that's well outside of my understanding. So I don't know.
All right, that's anyway. Good on you, T-Swizz. I'll be listening to you later on my ride home. No, I haven't even listened to a single one of her new songs yet, to be honest. Can we talk about Uber earnings?
Yes, Uber reported this week. I don't usually look too closely at Uber, but I was curious. I'd taken a look at food delivery businesses just out of pure interest, not for an investment perspective or anything, just out of curiosity a couple of months ago. So kind of wanted to circle back and just see how Uber's going, because my conclusion
Are they bankrupt yet?
Well, they're not yet. It's I mean, it's a very
Do they make
funny.
money yet? That's a better question to ask. Do they make money yet?
That's a really good question, because it depends who you ask. If you ask the management team, they are profitable. If you look yourself with your two eyes, and assuming you're not blind.
Of course we made money. Look at all this revenue we've created.
It's actually quite, I posted on Twitter that it's my new favorite example of just dodgy accounting. Not dodgy accounting, not actual fraud, but
maybe misleading.
Misleading accounting that works in Uber's favor, that might not truly represent the full picture. So I'll give you some of the headline numbers. We'll start at the top where it looks really great, and we'll slowly work our way down past the expenses and get to the basement where it's kind of it's not great.
Once we get down to the net income.
So at the top, there's of course gross bookings, which is kind of just all of the kind of the money flowing from payments for deliveries and for rides. So gross bookings reached $29 billion for the quarter, which was up 26% year over year. So they're massive now, over 100 billion in revenue per year. Humongous business. And that kind of segments into three segments: mobility, delivery, and freight. I won't talk about freight because it's very small, but mobility, which is their ride sharing component, was 13.7 billion, up 38% year over year. Again, this is gross booking, so we haven't gotten to revenue for Uber yet. But delivery was also 13.7 billion, up 7%. I found that really odd. I genuinely thought this was a typo, because not even to the next two decimal places, it's identical as well between the revenue. So I don't know. And prior to that, they were very different. So I don't know if that's a typo, and they're going to...
Surely not.
But it can't possibly be a typo. No, it's like the headline number.
There's so many eyes would have seen that number.
Yeah, it's just very odd that it was identical down to three decimal places. So
that is pretty ridiculous.
That was kind of crazy.
Yeah, that's hard. Now I'm like, maybe it is a typo. But it works. I mean, if freight's nothing and gross bookings were 29.36, I guess that makes sense.
Well, yeah, it does add up. It adds up.
Yeah,
because freight was like 1.7 or something like that. So in total, it does add up.
So it adds up.
Yeah, that's exactly what I checked immediately. I was like, hang on a second. I got the calculator out just to make sure it adds up, because I thought there's no way that this doesn't add up. That's so dodgy. But in terms of their monthly active customers is kind of a figure they use as well. 124 million, up 14% year over year. So good growth year over year. Bookings are continuing to expand at a high rate. If you take out FX as well, those booking increases were quite a bit more as well. I think delivery was up 13% or something if you exclude currency. So same as Netflix, same as, what do we look at? Google, Facebook, all of these companies are facing FX kind of headwinds. Revenue grew by 72% year over year, up to $8.3 billion, which sounds very, very impressive. But a lot of it...
lockdown period?
No, but a lot of that was from an acquisition. So they made an acquisition in Uber Freight, and that drove quite a significant amount of that growth. But also a large part of that growth was them increasing their, I've forgotten the name of the figure now, but it's the percentage that they take from essentially the overall gross bookings figure. So what percentage Uber's cut is as compared to the drivers and the restaurants and that sort of thing. That percentage went up. I'll skip ahead a little bit, but essentially at the bottom, Uber, at the top of the press release, Uber says adjusted EBITDA was $516 million, which
great.
So they're profitable.
Love a good adjusted EBITDA.
Yeah, so they're profitable, guys. They made $500 million.
That's impressive.
And that's it. Do you want to move on now? Should we? That's it.
Yeah. Well, hang on. Just give me a second, because I've just got to submit my buy order. Hang on. All right, there we go.
No, so obviously that's not the whole story. I mean, EBITDA strips out some of the most important costs.
I think as soon as you see, well, first of all, EBITDA is like questionable at best. As soon as you see the word adjusted,
yeah, the fact that they have to adjust. They have to
Throw it out the
adjust an
window.
already adjusted figure. Like EBITDA is like it's like saying adjusted net income. That's really what it is. It's like two adjustments.
we're going to adjust it twice to make it look better.
Yeah, exactly. Like that. Even the misleading figure was so bad that they had to adjust it. No,
Adjusted misleading figure. That's great.
yeah, exactly. No, okay. So let's understand a bit about their actual profitability by just looking at the financial statements and just ignore EBITDA at all costs. So revenue, of course, as I said, came in at 8.3 billion. Cost of revenues, so direct costs related to delivering food and that sort of thing, was 5.2 billion. They then had $800 million on research and development. I don't know what the hell they are spending on. That's an astounding...
$800 million?
Yeah, I think it was $2 billion for the first 9 months of the year, which is an astounding amount of money, which I have no idea what that is going towards. What's Uber... what are they developing?
The only thing that I can possibly think of that might even get in the realm of that is I remember that they were looking at aircraft.
Yes, like drone delivery and
drones. But the only thing I can't remember, but if they, I don't know, maybe this is Uber Freight R&D as well. If they've acquired some like testing Boeing planes or something like that.
Yeah.
Because, but I'm just like, I have no idea. This is all speculation.
Yeah.
Boeing 7.
I mean, for an unprofitable company spending 10% of their revenue on research and development is actually insane.
So a plane, if they bought planes potentially, then that's just over $100 million each.
But I think a plane would probably fall into CapEx. I don't know if it would fall into research and development necessarily, but maybe.
So.
I mean, I don't really know specifically. I'd have to ask someone, but yeah.
If it was bought for R&D purposes, would it be in CapEx or would it be in
potentially.
R&D?
Yeah, maybe they bought a private jet for R&D, right?
Yeah, maybe.
Because the CEO needs to fly between places. So it's maybe he's researching how much he enjoys flying private. Maybe that's what it is.
But yeah, obviously that's just like a pie in the sky kind of idea.
Anyway,
it's probably not true because 800 million. I'm just trying to see how this number is even possible.
Yeah, and I'll be honest, I don't follow Uber all that closely, so maybe there's probably I don't know if there's a reasonable explanation, but there's probably an explanation for it. But in total, their operating expenses came in at 8.8 billion. So their operating loss, yes, we're already at a loss after operations, was $500 million. So there you go. Their figure is we're profitable. We've made $500 million. Operating loss, we haven't even got to interest or anything like that on their massive loans. Is already losing $500 million. They then paid $150 million in interest expenses. So all in all, if you take operating income and then add the interest expenses, then you're at they've burned $650 million during the quarter. Which is insane. Of course, we can look at cash flow. On a cash flow basis, it's a little bit better. It's not great. They actually had $358 million in free cash flow. So the free cash flow positive until you look at how they financed their compensation. So they do a lot of stock-based compensation to avoid having to pay with cash. They spent in the quarter $482 million on stock-based compensation. So they spent their entire free cash flow and then some on stock-based compensation. It is an astronaut. I had to double check the numbers on this because I was so confused as to how they could be spending $500 million on
Who's
stock-based.
taking that home?
The CEO must be absolutely loving his compensation plan. That is an absolute insane figure. I can't remember what the CEO was making, but it was a lot, and the other executives were getting paid a lot as well. And you might think, well, that's not a real cash expense, so why do we care about that? Well, it's not a real cash expense, but it immediately dilutes the shareholders. So the way you should think about it is if they pay stock-based compensation, imagine that they have to then offset those added shares by buying back stock in the market, which would have been 482 million. So you pay for it one way or the other. You just pay for it in less ownership, a smaller percentage ownership than in the business actually spending cash. So
yeah.
But the conclusion here is by any measure, operating income, cash flow after stock-based compensation, they're not profitable. There's no way you can describe this business as profitable because just looking at their operations, they're not profitable unless you can argue that the stock-based comp is just, they could cut that out. But if they could, then why wouldn't they? But yeah, it is insane. This is a real quote from the management team. This is a real quote from the press release. Our global scale and unique platform advantages are working together to drive more profitable growth. So, well, yeah.
Jeez, that's what a story.
Yeah, it's kind of crazy.
But that's the thing is that they try and structure it, and this is why you've really got to, and I'm sure the media there were some media outlets that picked this up, and maybe some of them called them out, but I'm sure I could find one that was like, uber profitable, blah 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 blah. There probably is one.
They all
there.
were. I looked at a bunch of.
Were they?
I looked at a bunch of CNBC interviews and that sort of thing, and no one was even blinking an eye. Everyone was just like, "Oh yeah, so the profitable for the second straight quarter or whatever." They didn't interview with the CEO. Didn't even ask him about stock-based compensation.
Wow.
It's just, I don't know.
This is why you have to do your own research.
Yeah.
You cannot just go with what's in the media.
Yeah, and look, I'm not saying that they're a bad business necessarily, or I haven't analyzed them, but
I don't think we know enough about them.
No, but it's certainly something I look for is the management team describing the business as it truly is, and for a management team to say that they're profitable when they're clearly not by pretty much any normal standard in finance besides EBITDA, which is this kind of fake accounting fugazi that companies use. It's a
wazi, it's a woozy, it's a
exactly.
Yeah.
So there you go. Anyway, that's the story.
Right. Let's do some Q&A.
All right.
And let's do this one because it's very in line with what we we're just talking about. Should we go through this one? Do you want to ask this one?
Yeah.
I'll give you another one.
Hi guys, thanks for the podcast. No worries, thanks for listening. What do you think about stock-based compensation as being a part of operating cash flow? Does this impact how you calculate intrinsic value? Yeah, that is related to what we're just talking about.
Yeah, this is very related. So I thought we'd just get this one off the bat. I've written a little blurb here. It's interesting because to find the operating cash flow on the cash flow statement, you add back in the non-cash expenses and the depreciation, the amortization. And that's because they need to be factored in because they don't actually take cash from the company. And like what we were just saying, another non-cash expense is stock-based comp for workers and directors and executives and so on. And what you were talking about before, it does actually cost the shareholders something, but it's a weird one because it doesn't cost them cash. It costs them stock. But in your operating cash flow, then your stock-based comp gets added back in, which increases the operating cash flow. But in doing so, then you increase your free cash flow, which you might use for your discounted cash flow analysis, which can obviously throw you off. So we were talking about this a little bit off there, and it probably makes you probably already know where we're going with this because Hamish was just talking about it. Simplest thing to do is just treat, even though it's not, just treat stock-based comp as if it is a cash expense, and just remove it from your free cash flow or your owner's earnings. I think that's pretty much what you need to do.
Yeah.
But interesting. Yeah. Anything else to add on that?
I think that's pretty much it. I don't always remove it if I'm doing kind of a quick analysis because in a lot of companies, it's not an absurdly high figure. But take like an Uber.
Normally it doesn't catch you out.
No, exactly. But it can, especially
until it does.
Especially tech businesses, they tend to pay a lot of stock. But yeah, something like Uber, it's the difference between them being profitable and negative. So it's it's ripping their entire profitability. And so that absolutely needs to be taken into account. Whereas for other businesses, it might be 5% or something. So it's it's not as important.
I think in most situations it probably wouldn't catch you out.
No.
But if you apply, if you're doing like just a quick kind of analysis, then whatever, just go for it. But when you're actually going deep, at least take a look at the stock-based comp, because if you did it for a company like Uber, then you would be caught out. You would be caught red-handed. With an overinflated valuation. Yeah,
and one way to always notice is my kind of rule is I generally want to avoid companies with consistently increasing shares outstanding, because I want to know that my one share is a certain piece of the pie and that they're not just constantly diluting. And if you're keeping an eye on that over time, you can very quickly see, okay, they're diluting. Is it based on stock-based compensation, or are they just raising capital and diluting? Whatever it is. So that's kind of how I always check, is just look at the shares outstanding over time.
Yeah. All right, cool.
Give me this one if you want.
I'll ask you this question. Hamish, is Tesla within your circle of competence? What price would it take for you for it to be obviously cheap? It looks cheap to me at $75 per share. Do you have any?
Yeah, I think I like Tesla as a business. I think I probably could wrap my head around the auto industry. I've invested in the RV industry, which is has some of the similar characteristics of physical capex and that sort of thing. My thing for Tesla is the stock price has always reflected the inclusion of, at least this is my view, the inclusion of success in industries I don't understand. So things like energy, and even things like autonomy. These are technologies that I don't really understand. I don't know what the landscape will look like. And it seems to me that given Tesla's valuation, you would have to be making a considerable judgment about those things to invest confidently in the business. And that's kind of my view. And that's how I think about a lot of other businesses. I mean, I understand the advertising landscape very well, but for something like Google, it's a little bit more challenging for me because a large part of their valuation, I think, is their cloud business, and that's a little bit more complex. It's a little bit more uncertain. So that's how I think about businesses, is I need to be able to understand all of the main components that are driving value in the business. And sometimes you don't need to understand them. I mean, if Tesla got cheap enough and just on the auto business, then I could maybe say that everything else is kind of cherry on top of the cake, and trust that Musk would have some level of success in some of those industries. But I don't think that's the case with Tesla as it currently exists right now. So that's my thoughts on it.
Too hard pile?
Too hard. Definitely too hard.
Fair enough. Yeah, it is getting complicated. If you're not already, like I'm already in it. I've been following it for so long that I just know everything. But well, I don't know everything. I know the different parts of their business and how they run it and where things are manufactured and which factories, what's going on, how many cars out of each. I know that sort of stuff. But yeah, for sure. It is getting to a point. It's kind of like Disney, where if you try and try and get into Disney now, and you try and figure out it's this, it's that, it's this, the movies and the direct to consumer, and they got theme parks as well. And it's like, I think they were running like an education business in China for like Chinese students and stuff at one point. Disney. Yeah, so it's just like, what? And then there's merchandising, licensing, blah, blah, blah. There's like so many different factors that it's like cruise line as well. So yeah. It's one of those ones where some of these businesses are really cool and really interesting. But sometimes if you just trying to get into it, you either need to give yourself a lot more time to get up to speed and get familiar with the ins and outs of it, or you just chuck it on the too hard pile. Man, my too hard pile's looking pretty big over there.
Yeah, I mean, it's pretty much the entire 50,000 of stocks on the public market. Much. So, but that's okay. I mean, you only need a handful of good picks, so don't be afraid to say something's too hard for you. Most stocks are too difficult, even if they seem easy to other people. So yeah,
I think the best investors of the world are the ones that are able to stand up and say, "I don't know."
Yeah,
I think if you're someone that stands up and say, "Oh yeah, I know, I'm across it, I'm good, yeah, I'm G," then you're going to get slaughtered at one point or another. The best thing you can say is, actually, I don't know.
Yeah.
Because then you're at least honest with yourself. What you do know, what you don't know.
Yeah.
It's a very big part of investing.
Yeah.
Underrated. That's why I don't want to get too controversial here, but all of the people on YouTube or Instagram, they go, "Let me tell you something about this company. I'm just so good and I know exactly what I'm doing and you should do it too because it's obvious." Like they are going to get their asses handed to them at one point in their life and they will be broke.
Yeah, pretty much.
You can just tell because of their personality, like how
Yeah.
they think about things. You just tell.
Yeah, it is kind of insane just to give broad, even legally, not even legally speaking, but to give tips on stocks broadly to the internet just makes no sense, I think.
No, it doesn't.
Because everyone...
It's quite deceptive.
Yeah.
Really.
Yeah. Yeah, exactly.
But yeah, anyway. All right, we are running over, so let's wrap things up. Sound good?
Yeah. Yeah, thanks everyone for tuning in. As always, you can head over to the YouTube version of the podcast, or if you're on Spotify, you can just scroll down, and if you have a question, you can ask your questions in the comment section of Spotify or on YouTube. And we've got a few questions, but we're always taking more. So if you have a question, chuck it in there, and we'll do our best to get to a couple every week. As always, thanks to Sharesight for sponsoring, sharesight.com/young investors. Go check it out. It's fantastic. As I said, even if you're outside of Australia, New Zealand, and if tax time is upon you, then you can use Sharesight to help you in that aspect, or even just to track your portfolio performance over time. It's an absolute lifesaver. Thanks to Brandon for joining me, as always.
No worries, mate.
And
Cheers, mate.
We'll see you guys next week. See you later, guys.
See you later.